Sensex, a 200-point range at 54,000 levels is a very small range. But I believe the way we have seen the Sensex move in the last couple of days, and especially on Thursday and Friday last week when the markets opened with gap up and they continue to trade flat, after that kind of a trade already witnessed, I believe for the next couple of days would be this kind of a cool off. So the Sensex is expected to trade range bound in such a small range, and 54,000 is a very good kind of a support. So I'm not expecting the Sensex to break below this level. A range bound trade, worst case would be 54,000 and upside would be 54,600. So a 500 and 600 point range for the Sensex is what is expected.
We've got a lot of viewer questions already piling in. Mandar as well as Shahina, we're going to start taking viewer questions. But to the viewers, if you're tuning in for the first time, then here's the drill. If you've got a question, you can write to us on any one of our social media platforms, or you can send us a message on the WhatsApp number. Tell us your name, tell us the stock that you'd like to know about, and the duration that you'd like to hold it for. If you bought it, tell us what price you bought it at. Now, the first question, I'm not sure, Shahina, if you're going to have a view on this. 63 Moons, the erstwhile Financial Technologies Limited. We've got a viewer in Delhi, S. Ghosh, who's bought at levels of 172 in the green right now, wondering whether to add more. Would you suggest that, or would you suggest getting out for the long term?
No, I'm sorry, I don't have any idea of the stock.
Okay, fair enough. I'm going to come back to you then on, or rather I'll go to Mandar on Wipro. We've discussed TCS earlier this morning, but this is a question coming in from KVG Reddy. He's bought at levels of 680 and he's looking to hold for the next 6 to 9 months. What's the view?
Yeah, basically Wipro also similar to TCS is going through a correction, and
got a bit of an issue again with your feed. I'm going to try one more time. Wipro bought at levels of 680, 6 to 9 months.
A similar kind of a view to TCS. Most of the IT stocks are going through this kind of a correction, and this correction, I believe, is going to last for some more months. But looking at Wipro specifically, if I look at the last 2.5 years of move, then an up move from levels of 160 to highs of 740, and now a correction back down to levels of 400. So a 50% correction of the up move that the stock has witnessed in the last 2 years. So therefore, I believe at current levels, the stock should be able to find support. Now, he's bought this stock at a higher level around 600 rupees. Currently, the stock trades at 400, 420 levels. But there's a good kind of support. So levels of 400 is a good support. Right now, for the last 2-3 weeks, look, on the short-term chart, the stock is trading in a range. So it's trying to create a base. So no strong kind of conviction of an up move right now, but it's trying to create a base, which is a positive for a stock which has gone through a correction for the last 6 months. So that's a positive. So 400 is the support which one needs to watch, and on the upside 430 is the resistance. Once the stock manages to break past 430, the stock could see an up move to levels of 500, 520 in the next few weeks. So that's quite possible. The position that he's holding, I believe he should hold with a stop loss. He should keep a stop loss at 390 and hold. Once 430 is broken on the upside, you can ask us again and we will review the stock for you. We will discuss about the upper levels or the levels that get activated as the stock starts its up move. So right now hold with a stop loss at 398.
Okay, moving on. This one is from Varun Rao, and Shahina, do you track Shriram Pistons by any chance? Because that's the counter that he wants to ask his query on. Around 250 shares purchased at around 1,750 rupees per share for the last few years. But he's saying the stock is falling constantly. So he wants to know whether he should continue to hold, exit or accumulate. He's a long-term investor.
I think it is showing some bit of traction now because volumes of both OEMs as well as replacement is going up. If he wants to continue holding, he can continue holding with a stop loss of 650, and you can see a target of 735.
We've got a question coming in from Puneet, and he's asking about Indian hotels bought at levels of 243. Mandari is looking for short-term targets. What would they be?
For basically, though he's looking at a short-term target, I would.
Mandar, unfortunately, we've lost your audio again, but the question is on Indian hotels.
Now, the viewer wants the view for short term, but I would like to explain the long term chart as well. It'll just take 2 minutes because it's going to play an important role in the way the stock price trends going forward. Now, see, when I look at the long term chart right from 2006 to current levels, the stock had a major resistance at around levels of 160, 170. Now, the stock has broken past that level, has moved above it, and for the last few months, it's trading above this level. Now, this is a very positive thing. Why is it positive? Because this kind of a long-term resistance, whenever a stock breaks past this resistance, it tells me that the chart is suggesting that there is something interesting happening on the business front, which is going to take the stock up to new levels. And usually I have observed this in the last few years, that whenever a stock forms this kind of a formation, it usually doubles after that breakout. So this breakout is 165. So I believe in the next few years, the stock should head higher for levels of 330, 340. Now, looking at the short-term chart, the short-term chart is also interesting. It's not that it's looking bad, and the most important thing is the way the markets have traded for the last couple of weeks. This stock has managed to show us undercurrent. It's managed to generate a support around 220, 215 levels, and it's continuously holding up. So on the short-term charts, I believe one should look at a target of 260, 265 in the next few weeks. So maybe 2 or 3 weeks of time, and the stock should be able to head higher for levels of 260 and 265. A stop loss, if I have to suggest, has to be at around 235 for the short-term trade and aim for levels of 260, 265.
Right. This next query that I have is for you, Sharmila, and this one is, I beg your pardon, sorry, Shahina, I'm very sorry for that. Shahina, this one is coming in from Rajiv, and he's a long-term investor. He has 6 stocks, that is Aurobindo Pharma, Lupin, Biocon, Syngene, Laurus, and Aarti Drugs, all of them from the Pharma pack. He wants to say, he's actually asking that which one of these 2 should he look to sell, because he's making some profits in all of them. But he wants to know, out of these 2, which one would be the ones that he should let go of? And the counters that he has is Aurobindo, Lupin, Biocon, Syngene, Laurus, and Aarti Drugs.
Well, of the 2, it's a difficult, question. But if he has to sell 2, I would sell one large cap, which is Lupin, and one small cap, which is Aarti Drugs. Basically, Lupin, because they are really going through tough times, and I'm not too bullish on the expansion that they are doing or the new entry that they are doing in other spaces other than pure pharmaceuticals. So manufacturing of pharmaceuticals, I think the US business is also going through tough times. And Aarti Drugs, because we are seeing some pressure on margins because of higher raw material costs. So I think the next couple of quarters is likely to be a bit difficult for Aarti Drugs. So these would be the 2 I would sell. I would continue holding the rest, which, like for example, Aurobindo, they are going through tough times, but I think the correction now that has happened is quite substantial. So I think downside from here is not going to happen, is limited. So one can continue holding for the medium to longer term.
Shahina, I'm coming back to you on Delta Corp. I think at the time of the last GST Council meeting, there was some pressure on the stock because of the changes that are being talked about with regard to the taxation on gambling and on various other activities. We've got a viewer, Rahul, who's bought at levels of 250 per share. This is the average holding price. And he's looking at the next couple of years. Should he hold on?
Well, I think this is a stock that is likely to continue to see its, I would say, if not correction, consolidation, at least for the medium to long term. So I think there are a lot of negative, news developments that are likely to hit the stock in the next couple of months. So I would exit, book my losses if I was a medium-term investor. Long-term, you can always review after some time, maybe after a year or so.
This is from Ravi Chandran. He's writing to us from UAE. He's saying that he's holding 3,000 shares of Infibeam, purchased at 18.76 rupees per share. He's saying that he can hold on for the next 1 to 2 years, and he's hoping that it could give him 20% return. So he wants to know what should he do with this counter. Does it make sense to continue to hold on and also accumulate at these levels? What's the take, Mandar?
I won't suggest an accumulate because the stock has been trading with weakness, and this weakness is not only recent, it's been for a couple of years. The only thing that I would like to suggest is currently the stock is trading on a support, an important support around levels of 1250. So I would suggest a stop loss. So have a stop loss at 1150. If that stop loss is broken, then exit the trade because the stock is trading with weakness.
Shaina, I'm coming to you on EKI Energy Services. We've got Praveen from Palakkad who's writing in. He's bought at levels of 2,775 for the long term. And he's asking about the prospects. How do you view the fundamentals of this stock?
I think the fundamentals are very strong. He should continue holding. He's gotten at a decent level, and one can continue holding. I think the prospects for energy trading are extremely high, and carbon trading. So I think he should continue holding for the long term.
Shaina, this one is from Jayakrishnan, and he's saying that he sold Maruti Suzuki at a price of around 8,600 rupees per share. He wants to re-enter the counter for a medium-term perspective. He wants to know what sort of levels can he look at. Can you help him with some sort of levels for Maruti where he can look to re-enter this counter?
Well, I think even at current levels, Maruti, both technically as well as fundamentally, looks like it's going to be positive for the stock. I mean, this is all provided that the market remains at the current level. See, when you see the market correct, such large cap stocks invariably will correct. But if you're a long-term investor and you're willing to take a little bit of correction for the overall market, I think you can get in at current levels. You can keep a stop loss. I mean, if you want to keep a deep stop loss, you can keep it closer to 7,200, and maybe you can then look at targets of close to 9,000.
The next stock that we're looking at is ONGC. Mandar, this one's coming your way. We've got Kabir Bedi who's writing in from Punjab, and he's asking about entering ONGC at the current price. We've seen significant price action on this particular stock, and it's lost a lot of ground in the recent past. He's looking at getting in for the next 6 to 8 months.
See, I think the stock should be able to bounce back. The stock, no doubt, has witnessed a sharp correction, and that should help the stock bounce back again. Not a big kind of gain I expect in this stock, but yes, for this bounce back that is expected to happen to levels of 140, 145, he can surely enter. The stop loss for a long trade would be at around 118, currently trades at 125. So I have a stop loss at 118 and do a partial profit booking or take a review at around levels of 145, 150.
This one is from Mr. Dasaradi, and this one is for you, Shahina, and must tell that it is commendable that he's holding around 150 shares of Reliance Industries at a price of 355 rupees per share. He purchased this counter in 1998. Now he wants to know whether he can buy more or continue to hold on to the stock that he already has of Reliance Industries. He's a long-term investor.
Well, I would suggest that he continues holding on to the stock. I mean, there are a lot of positive triggers that can happen that, both in terms of the retail, oil and gas, as well as in the overall business. But I think there is some bit of consolidation that's likely to happen, especially, I mean, because of the sentiment that has come about in the Jio is likely to face maybe fresh competition in the very long term. As of now, the Adani Group is saying that it is only, they have bid for the spectrum only for their internal use. But that's an overhang of negative sentiment. So maybe we can see some consolidation. But I think a stock like Reliance, the performance is necessary if you're going to see the market move up. So if you want to participate in the market, I think Reliance you've got to be invested in.
The question is being asked by Vivek for the short term, but I'm still going to come to you, Shahina, on this one. Because interesting developments in the telecom space. We heard this morning about a new entrant possibly in the space, and one would assume that that's going to cause a disruption. We all know what happened the last time a large industrial group got into the telecom space. Bharti Airtel is the name of the counter. We've got Vivek, who's bought at levels of 654. He's looking at the next 2 to 3 months. What should his strategy be, Shahina?
Well, I think 2 to 3 months, the stock is likely to, at best, go into a consolidation phase, if not correction. I mean, if I'm not making too much loss, I think I missed the buy price, I would exit.
Okay. This next one, Shaina, is coming in from Vishal, and he wants a long-term view on LG Balakrishnan, and also he wants to know whether it's the right time to enter this counter for the longer term.
LG Balakrishnan is looking, both fundamentally as well as technically pretty strong. As I said, we've got, a pickup both in auto sales, both as OEMs as well as replacements. And LG Balakrishnan would be a beneficiary of it fundamentally. Technically also the stock is looking very strong. So I would continue holding. You could keep a stop loss, deep stop loss of 600, and you can see targets of 730 plus.
View is being sought on the benchmark. I'm coming to you, Mandar, on this Nifty 50. We've got a viewer who's asking about the weekly closing of the Nifty 50. He's asking whether it's going to close below 16,000 in all probability.
Yeah, I believe, Nifty should be able to trade flat this week, and the closing should be around 16,000. So I don't expect it to close below that, but around 16,000 to 16,200 is what the closing can be expected on Friday.
All right. This one is coming your way, Shahina, and this one is coming from Sagar. He wants a fundamental view on Craftsman Automation. He's saying that he's got an IPO allotment of the counter. After that, he added around 350 shares at 2,100 rupees per share levels. Now he wants to know whether it makes sense to stay put with this company. Is it a good company to hold on to for the medium to long term?
I think it's a decent, at current levels, it's a decent stock to continue holding on to. The business prospects are also decent. I would hold on to the stock. You can keep a stop loss of 2,000, 2,100 maybe. And you can see levels of 2,600 in the medium term.
Okay, so that's the view on Craftsman Automation. This is a view being sought from Ananya, and this is on a couple of stocks, DMart as well as Hindustan Unilever for a period of 1 year. Shahina, on the fundamentals, particularly on Hindustan Unilever, there are developments in the recent past with regard to palm oil, and commodity prices have cooled off just a tad bit. Are you positive on the space?
Well, one just cannot help but be positive on this space. If you see DMart numbers, I mean, they were phenomenal. So it definitely looks like things, FMCG sector has put the cost pressures behind them. And both DMart and HUL are fundamentally strong, long-term stocks with very strong investors holding into it. So I would, continue holding. I personally also hold both, and I would continue holding for the longer term. I think these are the stocks that provide stability to your portfolio.
All right. Nino wants to know whether it's the right time to enter Supreme Industries. What's your take on this one, Mandar? Mandar, this was you, Supreme Industries.
Yeah, Supreme Industries currently is trading on good kind of support levels. There's a 200-day weighted average on the weekly chart, which the stock has been respecting, so around the levels of 1740. Now, for the upside, there's also a resistance which one needs to watch around 1904 levels. Once that's broken, the stock could head higher for levels of 2100 as well. But currently 1900 and 1700, that's the range for the stock. So watch these levels. As and when these levels are broken, the next targets or the next levels would get activated.
Okay, the question is for you, Shahina, and this is coming from Krishna Kumar from Coimbatore. He's asking about Bajaj Finserv. We've seen this stock decline from the heady levels that it hit earlier in the year. He's bought at slightly elevated levels. He's bought at levels of 15,900. He averaged his acquisition price at levels of 14,200. It has lost more ground after that. So the question is, what would you do? What would your strategy be if you want to hold this stock for the long term?
Well, I think he has got it very high levels, but fundamentally, I mean, there is nothing wrong with the stock except its valuation. It has always been expensive, continues to be expensive, but it's a well-managed company. So I would say that he can look at lower levels to average, much lower levels, maybe somewhere close to, if at all the correction happens, somewhere close to 9,000, he can look to further average. But otherwise, he can continue holding for the long term. I mean, it will take a long time for him to meet targets, but maybe 14,000 is something he can look at if he holds it for about a year and a half.
This one is from Mahalingam Nagarajan, and he's saying that he's holding about 50 shares of VST Industries for over 2 years, and still he's sitting with a loss on this particular account. Shahina, he wants to know what should he do with this particular stock right now. Should he continue to hold on to it, or should he exit or average, because he's looking for a long-term investment?
Sorry, I didn't get the name.
VST Industries.
Oh, okay. VST Industries, I would say that the stock looks pretty decent as of now. One can continue holding it for the medium to longer term. I think it has the potential to go back to about maybe 3,400. Once it crosses that, then we can see high levels. Fundamentally, also things are looking better for the sector with no incremental taxes.
Shahina, a slightly open-ended question at this point, and like you've said in the past, I think it depends on where the market is heading. Sundrial wants to know about 3 stocks that you have identified in the mid-cap space that are attractive at the current juncture for a period of 5 years.
Well, in the mid-cap space, if you're looking at the long term, one can look at something like maybe a Vadilal, where I think the numbers were extremely interesting in the fourth quarter. While first half likely to be a bit weaker, but I think valuation is there, which provides comfort. So maybe at dips, you see, because I'm not very positive on the overall market. So I'm waiting for the market to actually find its level at lower levels before I really enter in a big way in some of the mid-cap, small-cap stocks. But I think that would look interesting. Then some of the other FMCG stocks you can look at, something like a Marico or a Dabur, if you're looking at the mid-cap space. So there are a couple of stocks you can look at. I would say even Arvindo, it has really corrected. I think at current levels it looks interesting. So you have Nalco, which is another stock I like in terms of metals. So you can make a basket of various stocks in different sectors.
Okay, this one is for you, Mandar, and the stock is the India Cements, the futures, which Swayam has sold at 170. He wants to know, was this a right strategy? What should be his next particular move on this front?
India Cements at current levels has a resistance, so is sold, and even if you look at the intraday trade today, the stock is currently down by 1%. But I would suggest that he books profit at around 170, 169 levels, because I don't see a further downside from here. And most importantly, he needs to have a stop loss for his trade. The stop loss I would suggest at around 176.
State Bank of India is the counter that we're looking at, and this one's for you again, Mandar. We've got Girish, who's writing in from Kerala and who's bought State Bank of India at levels of 499. What would the strategy be? Would you suggest buying at the current market price?
If one has a long-term view, then yes, SBI is one stock which one needs to accumulate. Now is bought at a very good level, and if he's a long-term investor, he should continue to hold. Now for the last 1 year, the stock has been consolidating, and it's range bound, so 500, 520 is a resistance, and on the downside 470, 440 is the support kind of a range. But once the stock manages to break past this resistance, we should see much higher levels in the stock. And on the lower side, on the lower levels, the stock has been continuously managed to accumulate buying interest. So that's a positive thing, and you should continue to hold this stock.
For Abhinay, and Abhinay wants to know whether he can buy Nazara Tech currently, and what's your view on this on the fundamental side, Shahina, for the longer term?
Well, see, it's one of a kind in terms of the stock that is trading in the sector. But at the same time, I'm not too comfortable with the valuation, so I would avoid buying at current levels. Maybe a couple of months down the line, if valuations look more attractive, then one can relook. I will avoid.
You on Tata Elxsi. We've got Ala Rao, who is bought at levels of 7,700, and looking at the next 1 year or so as a time frame, wondering whether to hold on for that time frame or should he exit at this point. Shaina, for you, Tata Elxsi.
Well, it's always been a very expensive stock, and for the long term, I think you can continue holding. But I think if you're a short term, maybe 3 months, 6 months, I don't see the stock going anywhere from here. So I could exit. But if you're a long-term investor, then this is one stock that has been a multi bagger and performer. And if you're a very long-term investor, you can continue holding, keep a stop loss of 7,200, and you can look at targets of close to 9,000.
Shaina said multi bagger.
Bagger, exactly.
So multi twice, so then it's compounded that way.
Let me just add one thing over here. I used to be an investor from very, very low levels. I think I've held it for about 10 years plus, and finally I decided to book some profits. So that's what I'm saying. Though I have nothing to say that the stock is not going to perform from here, but the valuations are so expensive, I would prefer switching to TCS.
Yeah, actually, that's what Alex and I were talking about. Is like there was a time when Tata Elxsi did not even make it in the bracket of being expensive or cheap. It was just there, stagnant at that particular price. And what a rise that this particular counter, among the rest, are the Tata group names that we've seen the rapid rise come in those counters as well during the COVID period. But this one is for you, Mandar, and this one is on Sterling Tools. Sapna wants a view on this counter. Do you track this one? So how does this look on the chart? If someone wants to invest, makes sense to enter, and who's already invested, what should their next step be?
See, the Sterling Tools is looking good on the charts. It's managed to break past last 3-year-old resistance. So this resistance was around levels of 250 and 260. So till the time it trades above this, the stock is going to head higher in the next few months. We could see the stock trading at around levels of 380, 420 as well. So the question is whether one can buy. Yes, one can surely buy. The stop loss for a long trade in this case would be around 250, and upsides to 380 to 420 is what is expected in the next few months.
The next one is coming your way, Shaina, and this is on BHEL. We've got Ketan, who's writing in from Pune, and who's asking whether to invest in this particular counter. What's the view?
I would not invest as of now in the stock, while I don't see too much downside, given the fact that they're getting a lot of orders, especially from GE. So fundamentally, things are looking up, turned into profits, but technically, I think one can wait for lower levels.
Next one is coming in from his username is RPSG. Please next time do mention your name, even if you're writing to us via YouTube. He's holding ITC 3,500 shares at a price of 282 rupees per share since the last 3 years. Now he wants to know whether he should partially exit, hold for the longer term, say about 5 to 10 years. So he's one of those investors, China, who actually invested in ITC 3 years ago. You have ITC that's hit the 3-year high right now. So what should he now do? I'm sure it's been a long wait for him, a long, slow wait for him to see ITC reach these levels. Now what should he do?
He should continue holding. It is one stock that is showing strength in a, I would say, potentially, market which has not decided which way it's going. So I would continue holding. I see much higher levels. You can see levels of about 330, 340 over the next couple of months. So definitely hold.
Interesting question, because you've already answered this in some form, Shahina. But this is an addendum. I asked you about mid-cap stocks. RK, who is a senior citizen, says that he's looking at investing in a few good mid-cap stocks, but he's asking whether to keep his powder dry for the next 3 to 6 months. Would you suggest that as a good strategy to have?
Well, you keep looking at, you're tracking the market. when you see corrections, deep corrections, sometimes we have been seeing the very deep corrections that come in, both in stocks as well as in the overall market. I think when you see, like, example, we on 15,500, 15,800 Nifty levels, at that point in time, it's a good level to enter into stocks across both large cap as well as mid cap. So I would keep a track of the overall market levels and invest. But even if some mid cap stocks give you deep correction over the next 2 to 3 months, I wouldn't say powder dry. You can start investing, start with about 15-20% and keep adding on every month.
All right. With that, we actually come to the end of the query segment. Thank you so much, Mandar, as well as Shahina, for joining us on the show, giving us a take on TCS, as well as helping resolve our viewer queries. And viewers, if we've not taken your queries today, don't be disheartened. We will take them tomorrow. But for now, we slip into a break on this edition of Buy Now, Sell Now. Don't go anywhere.